Hi, welcome to another HoneyStocks.com weekend analysis, and this one's going to be going out on the 30th of August 2020. Now, before I dive over to my screen share and walk you through some charts, some analysis for the forthcoming week, I just want to touch on my appreciation for everybody that reached out after last week's analysis. There was a lot of charts that I think were actionable, and I know a lot of them have started off very, very well for your hopefully mid-term positions. But something I just want to touch on, just in case this is the first time you've stumbled across the channel, maybe you've been attracted to the thumbnail, whatever it is. The analysis that you're about to watch and the presentation is not geared towards day trading in any way, shape or form. We provide charting research. We don't do or provide get-rich-quick schemes, unfortunately. The time horizon for our positions is generally weeks to months. We're looking to extract maximum profits from trends within the market. And that means picking good quality stocks and essentially taking the price from the entry point up until the point where you're told to exit. And price tells us when to exit, believe it or not. Hopefully you get some value from this. If you have any questions, thoughts or comments, I'd love to hear them. If there's any charts or any stocks that you feel like should be on the radar, again, feel free to let me know. But hopefully, as I said before, that you get something from this, and let's dive into the charts. Now, before I get into the individual charts, most of you know this already, but please do pause the video. Make sure you're comfortable with that before watching. Basically just says that there's not any investment advice, do your own due diligence, etc, etc. And perhaps to give myself a little bit of credibility, I'm registered with the CMT Association, working my way towards my chartered status, and technical analysis and charting research is something that I'm widely known for. So if you get value from it, as I said at the start, please do subscribe to us on YouTube. Now, I had a lot of questions after last week and the analysis that I put out there. Now, for those of you that perhaps are new to the channel, maybe you've stumbled across my work for the very first time. Last week I put out an analysis just like this one, and this was the performance of the stocks that I talked about. That's the 1 week performance. Feel free to go back and check that out. But many of you have been asking for an update on a lot of these charts, so as requested, here is the insight, I suppose, to some of those charts and the overall market at the moment. I think the technicals of the market are confusing a lot of you because of the disconnect between the stock market and the economy. Now, I don't want to talk about that too much today. I think we all accept that there is a disconnect, but with the market, our number one job is to take advantage of the trends and the behavior of price, and that is what my research is predominantly focused on. So where are the areas of strength at the moment? Well, it's very, very difficult to ignore the strength that we're seeing within technology. That makes sense to me. That's the only aspect of the market that kind of makes sense to me at the moment. Technology stocks are ripping higher because more people are using technology. That's the basics of my fundamental understanding. I'm not going to try and pretend and kid anybody on that I'm a fundamental expert, because I'm not. Technical analysis is what I'm known for. So we've got a rotation graph here, and we can see here that the cloud computing ETF SKY is now starting to rotate into the leading area of the market. So that a rotation graph essentially shows us that we have a leading area, we have a weakening area, a lagging area, an improving area. So the theory behind the rotation graph is it just does exactly that. It rotates around. So as we can see, we've got the SKY ETF. It's in an improving sector, and the theory is that it moves into a leading area and starts to outperform the market because the rotation graph is benchmarked against, in this case, the S&P 500. So we want to be identifying areas of the market that are outperforming the S&P 500, and that should, in theory, drive outperformance with your portfolios. Now, the S&P 500 is breaking out. I think it's very, very clear. I've highlighted this chart last week. We got the breakout. We've had sustained continuation. So it's very, very difficult to be bearish on the market despite what the economic conditions are telling us. We've got the Dow is now looking like it's starting to move towards testing all-time highs. Again, it'll be very, very interesting to see what happens with the Dow at this very key level. I think if the Dow can get above that 30,000 limit, then the market really is going to go and blast off, even more than it has done already. For my work, the Dow is a very important chart. There's a school of thought that the Dow leads the market, or the S&P 500 leads the market. I was taught that the Dow is the most important index in the world, and if it's breaking out, it's difficult to be bearish on the market. We know technology has been in a long-term structural uptrend since we've had the crash. Again, technology has been a massive area of focus for my work over the last few months. I've been providing bullish charting for the last 3.5 months now, and naturally that's done very, very well. We've got volatility, which is declining. For those of you that aren't aware of volatility and how it works, there's an inverse correlation between volatility in the market. So when volatility is spiking, the market tends to be going down. When volatility is dropping, the market tends to be going up. So it's very, very key for me that we have declining volatility. Yes, we had a bit of a spike because of a Fed announcement the other day, but again, these are all short-term impacts to the market. We can see the structural trend looks to be down at the moment. Will it continue to go down? Will it spike? We don't know. But what I do know is that price will tell us when we have to start taking defensive action in the market. Again, for those of you that are maybe new to the channel and haven't followed my work very, very closely, my work got a lot of attention 6 months ago because my charting was able to get the majority of my clients defensive ahead of the crash, and that's enabled a massive outperformance. And what I'm going to do is at the end of today's video, I'm going to link a follow-on video for the analysis that was provided to my clients in the week leading up to the crash. And so don't take my word for that. I'm very open with my work and very transparent with my work. So for anybody that is looking for how to get defensive ahead of a big market decline, I think you'll probably get a lot of value from that. And like I said, I'll link it to the video completely free. Hopefully it helps somebody out there. Now, updates to the charts. Now, we know that Microsoft is breaking out. Now, what I would say is RSI at the moment is sitting at around 70, so it's not massively high. There is a lot of room for this to potentially run, but we know that with any uptrend we do get these small pullbacks. But I think if your time horizon is weeks to months, which it is for me, I'm not a day trader, I'm not get rich quick schemes as I said right at the start, but Microsoft looks to be breaking out. We have Amazon, again respecting 13th century mathematics here. We've broken out, it's held firm above very key $2,900 level. Ultimately, I do have an upper price target here for Amazon of close to $4,400. So will it get there? Again, we don't know. Technical analysis doesn't give us the time frames that price reaches an end destination. You just have to trust the trend. We can apply indicators to tell us when that trend is looking to end. So if you've taken this entry at 2,900, you just simply apply a trailing stop loss and hopefully it reaches 4,400. But if it doesn't, you'll get stopped out, but you'll be stopped out at a very handsome profit. Again, Peloton, this has got a lot of momentum potential in my opinion. I highlighted this one last week. It has broken out. It's been a massive performer for a lot of our clients and members over the last week. Long may that one continue. AMD, I think, is very, very close to breaking out. Again, it should be added to your watch list. Again, we have to be anticipating these breakouts before they happen. I think one of the reasons my work gets as much attention as it does is, I don't use the magical hindsight indicator. You have to be prepared in advance for these breakouts, because when they occur, you can get these big volume momentum spikes. But the trend is clearly up at the moment with the AMD. Again, a lot of our clients have been in since $60 since we got this breakout. The trend is still up. It's still paying. But for those of you that are looking for a new entry, I think this level makes a lot of sense. Nuance Communications, again, is hovering around a very key level here in my opinion. I think we just need to get a sustained break here. I like it above $31. The reason I like it above $31 is when we look maybe left on the chart, we can see that in the past price has actually been slightly higher. So we just want to have the confirmation that price has cleared its all-time highs, because when we move it on stocks, just before their all-time highs, what can oftentimes happen is we just get a bit of resistance and price falls away, and then before you know it, you're holding a stock for 12 months, 18 months until it tests its breakout level again. So again, I think Nuance Communications, go and do your own due diligence, but certainly that's a key level for me. Zscaler again has broken out. I think that needs to be added to the watch list. Thank you very much to those of you that reached out last week after the analysis that I put out on Alibaba. I know it has been massive for quite a few of you. It makes me very, very happy when I get nice comments, nice messages. I do this. I don't get paid for presenting. I don't get paid for producing this content. It takes me 5, 6, sometimes 7 hours to prep everything, record it, edit, get it all out there. So I'm very, very pleased for Alibaba, but the uptrend is there. It's broken out ultimately. Again, using 13th century mathematics, I do see, provided we don't have any big massive market declines, corrections, etc., I do ultimately see Alibaba moving towards 344. Facebook, I had a couple of comments on Facebook last week. The target that I have in place for Facebook is 322. This is a breakout that I highlighted a few weeks ago. And certainly I don't see the trend stopping anytime soon, but I would be very, very cautious once it gets to 322. The reason for that is we can see that in the past these levels have offered very clear levels of resistance for price. And again, it's not saying that you can't continue to hold and dollar cost average if that's your thing, but for me, I just like to say thank you very much, Mr. Facebook, and move on to another position once we hit these targets. You can always buy back in again if it breaks out, but again, everybody has a different process. I'm not saying to anybody that the process that I have and the charting that I have is the only process, because something that we learn with the CMT is all styles are valid, and I will never tell anybody that the style that they have is invalid or doesn't work, because all styles can be made to work. It's all about consistency and process. So hopefully that 322 target comes to fruition, but it'll be very, very interesting for me. I think CrowdStrike, we have earnings coming up, so that'll be very, very interesting. I think above this level here, but I would be waiting to see what happens with earnings, because the issue that we have with earnings a lot of the time is we can get really positive earnings, but the stock market declines heavily. And it always amuses me a little bit to see a lot of comments on individual stocks, especially on something like stock twits, where everybody's really happy at, positive announcements, and then you just see all the curse words come in because the stock market's declining and nobody really understands why. What's really at work there is the big money are just toying with everybody, and we can't do anything about it. So what you have to have in place for earnings is some kind of rule set that says that if you want to hold through earnings, you have to have a certain percentage profit in place. For me personally, something that I've found works reasonably well is having a 10% profit buffer in place. Clearly you could go down the route of options lotto plays. Again, it's not invalid, it's valid as long as everything's risk defined. But if you're holding common stock and you're holding through earnings, in my opinion, it's very, very amateur to buy positions in the days or minutes leading up to earnings. I don't know any successful investors or traders that do it. So, certainly I would just be very, very conscious of having some sort of rule set in place. With Mastercard, I highlighted this one last week and it, blasted off. Now, something that I've been asked this week is about, how overextended is price. Well, we can see the RSI is quite high at the moment. It's up at 83. Can it go higher than 83? Absolutely it can. But I wouldn't be jumping on this at the moment. I think it's much more likely that we get a little bit of a dip. We know that with any uptrend, we have to deal with little pullbacks here and there. So if we do get a pullback, I would like to see the 350 level hold as support, because what we tend to have is polarity, which is we have a breakout, and that's breakout above resistance, and then that resistance turns into support. That's what's called polarity. So that's what we would be looking for here. We want to see this level hold as key support, and then that will offer an optimal entry into the market, in my opinion. Now, Match Group still got a target here of 148. It's doing a whole lot of nothing at the moment. It's been doing this for about a month, but a lot of the time these consolidation plays will in time start to resolve higher. The underlying trend is higher with Match, so I do have an upper target there of 148. I think Beyond Meat has some momentum potential here. I think potential breakout from a consolidation triangle pattern here, and again I'd be looking for this to start to move towards 166. If we get a continuation on this, we'll only know if we have continuation on this on Monday, Tuesday. In a few hours time, the market, when the futures open, the market could be horrific. So I don't know what the futures are going to look like. I don't know what the market's going to look like tomorrow. That's something to say with a lot of these charts. I reserve the right to change my thesis on 30 seconds notice, because that's the stock market for us. We have Enphase Energy. I think we're building a bit of a base here. The solar energy plays have been unbelievable lately. I don't know if anybody has been looking at the ETF TAN, otherwise known as TAN, but there's a lot of I think a lot of structural uptrends within. So I think that's somewhere that you could potentially look to do some due diligence. Nvidia has been utterly incredible. Again, I've taken a lot of heat on this one a few months ago when I put a 620 target on it. It makes a change when I get nice messages instead of nasty emails, which I get quite a lot of. But certainly I think Nvidia, there has to be a 620 target on it. In my opinion, it's a chart that we sent out to our clients and members a month or so ago, and it's doing very, very well. We've got DocuSign. I think it's looking like it's building a bit of a base here. Again, ultimately, I do see this starting to move towards 260. Home Depot, again, long-term structural uptrend. It does have to clear the $300 round number barrier, but again, 13th century mathematics, folks. I think 374 is a logical target to aim for. We've got Square Inc. Again, a lot of hype around Square at the moment. Again, my chart from last week hasn't changed. You know, we are super bullish with our charts on the iPay ETF. It's one of the reasons why Square, Mastercard, etc. Have been such big plays. But again, 211 would be the target there. Netflix had a monster breakout this week. Again, this was included last week. Massive move. It's consolidating a little bit of profit taking. Is it building a bullish flag pattern? There's a potential there, but ultimately, you know, I do see this going to test its former highs around 575. We've got Nike. I think new entry. I'd be looking for this above $115. Again, I like to just have the safety of having these levels cleared, and then we can say, okay, let's take it to the next level, and you just start to move your way through the Fibonacci levels. That's the theory behind it. We don't know when the trend will stop, but ultimately we want to be in the trend for as long as it's paying a profit. NVTA looks like it's potentially building a bit of a base, broken out a little bit, and you know, although it's been a little bit frustrating over the last week, I do see this ultimately resolving higher. For those of you that aren't aware, it's a holding in Cathy Wood's ARC Capital. So, you know, absolutely, I think NVTA should be on the radar. I think PayPal might be looking like it's breaking out. I'm looking to see this just hold above $200. I made a comment earlier about the round number barrier. It's very real, psychological round numbers. So I think above $200 would make a lot of sense there. Roku, I think above 177. Now, something that I am conscious of is it's had a move of nearly 20% this week. I highlighted this last week and said something along the lines of, you know, if you're swing trading it, you know, provided this level holds, it's probably going to move to the top of the range. Now, that's exactly what's happened. But when you're taking breakouts, you always need to consider where the stock has come from. So what I would be looking to see here, one, I would like to see it hold above 177, but you want to see a little bit of consolidation for a few days. That's just showing us that it's just digesting a little bit, because stocks don't go up in a straight line forever. So I'd like to see a breakout here. I'd like to see a little bit of sideways movement, and then the next leg higher. So I think above 177 for me makes a lot of sense. With Roku, Starbucks, again, highlighted this one last week. Absolutely a massive performer. It's now broken out above a key pivot level from the 8th of June. And, you know, absolutely, I think this is one where we just need to be conscious of the levels where it might offer a little bit of resistance on the way back up. But again, if this starts to move, I'd like to see this to go and test all-time highs. Trade Desk, structural uptrend, it's still holding firm. Last week I built in this trend line. This looks like it has a bit of merit here. Probably slight concerns if it breaks a little bit lower here, maybe a short-term decline. But ultimately, you know, the trend is higher with Trade Desk. We've got Slack Technologies. Again, highlighted this one last week, saying how this one is holding its support, and you know, lo and behold, it's looking like it's potentially going to break out here. Will the breakout have legs? Well, I think most of us understand that it's been a bit of a frustrating stock over the last few months. I mean, this is one that I take in this breakout here, and was stopped out, and it's just been one, it's just chopped about, done a whole lot of nothing. But hopefully this is the start of a new longer term structural uptrend. but you know, we'll wait and see what price tells us. I think Pinduoduo above $100. I think it's in a consolidation at the moment. So again, I think above $100 there, and it probably starts to fly. We've got Stone Co Limited. Again, highlighted this one last week. I think we've got a breakout, but we just want to have this confirmed close above $52, and that for me would make a lot of sense. And we've also got Restoration Hardware RH, again upper price target here, and I've got here at 368. Makes a whole lot of sense there. So that's the analysis for you. If anybody has any questions or thoughts, then you know, feel free to comment below, reach out to me privately. If you're somebody that struggles with charting, if you're somebody that maybe doesn't necessarily have the understanding of what's going on with charts, or maybe you want to have access to our research at honeystocks.com, you can jump on to our website, honeystocks.com. You can have a look through, see exactly what it is that we provide. We've got a premium analysis that we send out to our institutional clients, our members, etc. We've got some trade ideas. We provide a halftime analysis. We also provide a trading community for our annual members, and we also provide charting support. But I think something that I wholeheartedly believe in is the education side of things as well. So we include our full technical analysis program. It's fully included. We don't charge for it anymore. It's included completely free with our annual membership. But you know, just to kind of show you what it is that we do, just so you can get a little bit more of an idea. This is, you know, one of our charts that we sent out to our clients and members for Nvidia. This was Breakout 440. We're obviously motoring on that one. NVTA, very, very clear instructions saying how we want this to happen. Again, we were waiting for that breakout, and that was an absolutely massive stock. Zscaler is actually still paying a few of our members who are still holding this one, and you know, we know that Zscaler is a double, you know, that's 100% move, and this alert was provided on the 5th of May. So Twilio, again, you know, this was provided to one of our members, one of our charting support. Charts above $100, and this one is just ripped much higher than what our target was. And that's the value of, you know, choosing stocks that are trending. But you know, something that is very, very unique about what I do is on our website I log every single trade idea that I have ever put out to our members over the last 3 years. Now, I wish that this was the industry default. I wish everybody would operate with the level of transparency. Now, just to you know, clarify a couple of things here. I'm not saying to anybody that you can join and you're going to make all this profit. It doesn't work like that, because there's only so much capital. You're never going to be able to move in on every single chart that's provided. But hopefully what that list will do is demonstrate that I have an ability to identify uptrends in stocks, targets, etc. So feel free to go and check that out. It's all listed on our website. We're not penny stocks. We're not picking stocks that are pump and dump schemes. We're choosing high quality stocks. We're using logical technical analysis, and we don't do get rich quick schemes. We don't day trade. The time horizon for our positions is generally weeks to months, and the type of success that our members and clients have, you know, $45,000 profit for June. Terry, after 10 years of trading, best quarter ever, beat pneumonia as well. David, 12,500 profit in options. Now, the other thing to say on these, not everybody has the same starting capital. Some of our members are trading with healthy 6-figure, 7-figure accounts, whereas we also have other members that are anywhere between $5,000 and $10,000 as well. So, you know, that's just to kind of put things into perspective here. So I think if you're looking to get away from day trading, I think if you're looking to maybe, you know, learn technical analysis, maybe you just don't have the time to filter through thousands of stocks, etc. You can jump onto our website. You can get everything signed up. It's only $500 a year, and there's an incredible amount of value in that. I think most of you already understand that we have a membership limit of 200, just to kind of show you there. Actually, is it in here? Yeah, so we have a membership limit of 200. We're up at, I think it's 186 now. And, you know, I have no grand plans to become the biggest, you know, trading community in the planet. I couldn't think of anything worse. So if you do enjoy this analysis, if it speaks to you in some way, then, you know, feel free to register your details and get signed up. You can do it all directly on the website now. There's not any need for back and forth emails. But, you know, if you've stuck around to the bitter end here, thank you very much for listening, and good luck with your trading this week. Thanks very much.